Good morning and welcome everyone to the Moneycontrol live stream. Happy Valentine's Day. You're watching the opening bell and I'm your new host, Nickey Mirchadani. Well, markets point to a positive start despite 3-month high inflation rates. US markets have edged higher ahead of the inflation rate. SGX Nifty futures indicate to a firm start coming in on a Tuesday's trade, and Asian Pacific markets too are trending higher. FIIs have been the net buyer to a tune of around 1,322 odd crore, and also we're seeing buying coming in from DIIs to an extent of around 520 odd crore in equities today. New age companies, sugar stocks continue to hog the limelight in today's trade. And in key earnings to watch out for, we'd be looking at Adani Enterprises, Eicher Motors, Grasim, ONGC, Apollo Hospitals, Aster DM Healthcare, Bata India, Bharat Forge, Biocon, Bosch. And this is the few of numbers that we'd be looking at. But before that, let us get going and discuss some of the stocks and strategies out there with Pritesh Mehta, who is the Senior Vice President Research at Securities. Pritesh, good morning there. I'm going to start off by asking you about the Nifty levels because A, it's underperforming the markets, the emerging markets for quite a while. B, we're looking at a negative, at least 2 sessions of negativity, negative sessions coming in for Nifty. Do you think Nifty would be able to snap that trend and give a positive start today?
Good morning, Nickey. Now, see, I don't want to sound too bleak. A positive start does not bring an end to things. See, we need to look at few things. If you look at the last 2 weeks, the range of the market is getting narrower. Whether you look at Nifty or Bank Nifty, we have VIX trading at multi-month lows. Thereafter, when you look at the Bank Nifty, our leader in our markets, it is underperforming Nifty. So for me, inter-market analysis study plays a very big role in underlying that, understanding the trend. So right now, the Nifty is underperforming emerging market index, Nifty is underperforming gold, Nifty is underperforming bonds. So when we look Nifty against different asset classes, there is a big underperformance playing out. In this kind of setup, even if we are getting a move of 200, 300 points, I find it difficult for it to sustain. So, for a while now, Nifty is holding around 7,700. But I think it's just a matter of time. It breaks that and we go back to the lows which were created during the time of budget.
Pritesh, when you say it's about matter of time, because, 8 consecutive sessions, we're seeing Nifty being in that range-bound trade, right? When do you think we'd be able to move either side? And since you have somewhat a bullish and a bearish understanding on that one, what are the levels that we are expecting on this one? And by when do you see the downside coming in?
See, it would be difficult to comment on the time. But the thing which I'm sure of that, we need to look at the leadership sectors. The banks are underperforming. PSU banks, which were a big part of the which we witnessed in last few months now, they are giving away. IT has taken a pause now. Yesterday was a big red tick on the IT index, and I am expecting this index to start underperforming now. We can see correction taking place in the IT index. Private banking index has been underperforming. So when we look at the big winners or there are few places, a few pockets where we can see sectors doing well. So in this kind of setup, I think we need to be defensive. We need to stay away from from chasing high risk stocks. Rather, I think we should wait for market to stabilize. 17,200 is a level which I'm eyeing out for. Around this level, I think better opportunities will emerge.
Sure, Pritesh, stay on with us. We'll quickly address the stocks and news. You can, of course, let us know which are the stocks of the given list that you find attractive and the levels for the viewers out there. The first one in the list, we have Nykaa. Of course, new age companies continue to remain in focus. But if you look at the earnings, net profitability, bottom line has taken a hit by as much as 71%. The revenue, top line has seen a 33% jump. EBITDA is up by 13.5% and margin stands at 5.4%. As compared to 6.3% YOY. Nothing sort of numbers if you look at really on the margin front. 8 analysts have almost downgraded this counter over the last 1 month. So we've already seen significant amount of downgrades coming in. The numbers somewhat have been factored into the prices. Jefferies has maintained the buy rating on this counter and suggested that revenues are largely in line. There's a sharp expectation, the GMs, the gross margins were way below expectation, but there was some amount of positivity or surprise that came in the acceleration of the company's fashion growth business overall. Coforge, of course, that's the second one in the list. Of course, we've seen sharp traction out there, right? In the previous session, in the bulk trade today, we figured out that, as per the filings on NSE, we saw that the promoter was the one which was offloading the stake, 9.8% stake for a valuation of around 2,430 odd crore. Now remember that this also comes at a discount from the current market price, which is almost 6% from the current market price, right? Overall, the promoter and the promoter group community, they hold around 40% as per the December shareholding pattern. Doesn't really augur well, right? When the promoter sells the share at a discount of 5 to 6 odd %, it speaks volume about the kind of market price that they're ready to accept for their counter. So that's one. And of course, on the buying side, we had domestic institutional investors, which had bought in a stake in Coforge. And other one that we have in our list is Zee Entertainment. Lackluster numbers yet again. But what really plays out for this one is Zee and Sony merger. That's expected to be a re-rating catalyst coming in on this one. If you talk about just the plain set of numbers, net profit down by 90%, revenue flattish out there, EBITDA down by 27 odd %, and the margins at 16% as compared to 22% in the corresponding quarter. Of course, need to mention the fact that the company has had an exceptional loss of 170 odd crore in this quarter. All right, Pritesh, I'm going to quickly toss it back to you and ask you about, out of the three counters that we've suggested, which is the one that looks favorable? Of course, not to take away the fact that Adani Group also remains in focus. It's hired an independent audit, Grant Thornton out there after Hindenburg fallout. What do you think? How do you look at these stocks? Because Adani Enterprises will also be reporting in numbers today, right?
See, there's a big saying when we talk about the world of charts. We need to stay away from counters which are in news. So I would like to focus away from Adani Group stocks. And since we were talking about Nykaa earlier, this stock for the month has gone up by 9%. But what we have done at Securities, we have created customized indices. So there is a new age companies index that we have created, and within that space, within that index is on the verge of giving us short-term breakdown. So yes, I am not bullish on this particular counter. Yes, the stock has struggled so far, but we can see more pain going forward. I think the stock can go back to levels of 125, 122, in fact, in the near term.
Some more pain coming in on that one. Pritesh, we're also looking at Shree Renuka's number, right? Because they're a good set of numbers. Well, a lot of things have been said for sugar stocks now. The previous year was a good one. The budget, we've seen some amount of negative trend playing out, but the numbers seem to be a decent set of numbers. But we are going to be quickly waiting on the sidelines for the market opening. Well, here, it's a positive start coming in for Nifty, right? Just as the way we expected. We are looking at some gains coming in on the screen. Nifty is trading around that 17,826 odd levels. Let's look at the Bank Nifty index for you. If that is also supporting the trend coming in on the positive setup, 0.2% even on that one. So clearly some amount of positivity finally creeping into the markets after 2 sessions of losses out there. Sensex, of course, 0.3% there, positive start coming in even on that one. If you can quickly pick up and pull up the sectoral indices, the top gainers and top losers, which are doing well for the day, we'll have an idea of how the setup is clearly panning out. But it looks like a positive start clearly coming in. It's a positive handover from the global markets, and Indian markets too are trading in tandem with the overall setup per se. So clearly a positive start coming in on the Valentine Day. Nifty IT index and Nifty auto index is something that I'd like to keep an eye out on. Nifty banking index, of course, was a positive one. IT index too, we're finally seeing some gains out there, almost close to 1%. So, the positivity, the positive trend continues for Nifty IT index too. And for that matter, Nifty auto index, let's bring that up. That is one counter that we'd like to keep an eye out on. We're seeing some amount of gains out there. It completely looks like a fairly decent start to the day, if not really a big optimism. But do remember the fact that we're sitting with this kind of numbers just when the inflation is at 3 months high, just when the IIP has slowed down. So clearly, some positivity creeping into the market. But Pritesh, I'm going to toss it back to you and ask you, what do you make out of the numbers, especially Nykaa's number, because we've seen some amount of new age companies, right? They continue to remain in focus, and Nykaa was the one which, we've seen cuts coming in on Nykaa, almost 3% gone there. So market doesn't seem to be rewarding Nykaa. I mean, I thought maybe the earnings could have been factored into the market price, but clearly more losses coming in on the new age company.
When we talk about new age companies, as I mentioned earlier, that we have created customized indices. There's one particular stock from that particular, from the space, that is Policy Bazaar, which is looking best out of the lot. It is on the verge of giving a break on the upside after multi-week consolidation. So I'm expecting a 10% move on the upside. As far as Nykaa is concerned, I think there is more pain, as we mentioned earlier. 125 is the near-term target.
All right, Pritesh, what do you really make out of the sugar stocks? Because in the previous, year, we've seen huge amount of gains coming in on the sugar. Shree Renuka sugar somewhat managed to deliver an operational level which was decent. What do you make out of these numbers? Do you see some amount of rally and traction coming in on Shree Renuka sugars?
See, when we look at the subsectors, sugar has done well. When we look at if we apply top-down approach in the space, Renuka Sugar, apart from that, Balrampur Chini and EID Berry, they are the ones which stand out for me. And when we look at our customers indices, the sugar index, it is doing well. It is slowly, gradually moving higher. We are yet to see any positive follow through coming in the particular index, but I think these stocks are holding out pretty well. It's just a matter of time when we see strong moves coming in. So as far as Renuka sugar is concerned, I'm actually having a positive view. In fact, we can see the stock rallying towards 62, 63 levels in the next few weeks now.
All right, Pritesh, thank you so much for taking out the time and giving those views to us. Pritesh, I'm going to let you go on that note. Thank you so much for taking out the time and quickly bring in the other guest that we have. Anand Shah, who's the head of Portfolio Management Services and AIF for ICICI Prudential AMC. Let's bring in our next guest. Anand, good morning out there. How are you doing? I'm going to start off by asking you about the assessment on the market, especially the new age companies, before I pick on the themes that you like. What do you make out of it? How are the valuations stacking up for this? Do you see some amount of optimism for these companies, or you think it's just too early to talk about them?
Hi, very good morning. And I think market will take time. Market will take time to understand. These are, when you say new age companies, you also have to appreciate that they're very different in terms of expectations of growth. People in paying price for them to grow much faster than otherwise what the companies and the industry is growing in that segment. So that's something which is, given that there is a slowdown in the discretionary spend, there generally speaking there is a slowdown and miss on the expectations on growth. But more importantly, I think from the market's perspective, from the listed space, the investors are used to cash flows, they're used to profits. That's another angle which my take is that market will take some time to adjust, and to that extent, yes, we are seeing more noises from these companies about profitability, about cash flow. So I think there is some sort of coming together in terms of what are the expectations of market, what are the expectations of these entrepreneurs, what they will deliver, and as it comes closer, I think there would be a point of time when the market will be able to appreciate these businesses.
Sure. So of the lot, most of them, when you talk about the guidance part, either have suggested that the profitability is just going to be there in few quarters. Some of them are vague. Some of them have been really particular. So you say particularly now is not the time when people will just as yet start looking at this, and probably wait for a quarter or another quarter to see how the profitability stabilizes, and then probably take a call on this one.
I think you have to also see everything in context of the valuations at which they were trading. I think that's also a big positive that the valuation at which they used to trade 12 months back, is something which is not the case today. So to that extent, markets' expectations would have also come off from where they were at the time of the listing. And to that extent, again, I'm saying there's no 1-0 call on these companies. Each company is unique. Each company will ask for a lot of research, a lot of understanding of that business, the dynamics of those businesses. So, each company will have to be, given a serious consideration in terms of what is the potential of the business, what is management, ambitions, where are the cash flows, where are the profits, when. So again, I don't have a straight answer for you as a cluster, because each company has a different phase and different industry for that matter.
So off the lot, if I'm just supposed to ask, because each of them are divided into different sectors each, right? So which of the sector of the new age companies do you think looks attractive to you? And based on that, probably then we can decide the counter that looks a little bit attractive given the dynamics.
Now, again, I wish I could give you a simple answer to it. Again, I'm repeating, and at the cost of repetition, the investor should be aware that each company is in that sense also unique. We don't have history to look back and saying, look, this company is like that company, and in the past they have done so and so forth. So I think each one of them is evolving. Each one of them is unique business, and nobody has seen the future. And to that extent, you'll have to have a lot of margin of safety on your side, given that there's enough uncertainty. And to say uncertainty is the understatement, because they are evolving businesses. The business models are evolving. We are also not clear what would be the revenue drivers, what would be the business in each case. And to that extent, I think while you would want a clear answers, one has to be honest here that any of these businesses will have clarity only into the future. And we can only with hindsight tell that, look, that was right and that was wrong.
Sure, Anand. I'm just going to quickly touch base on the other themes that you're bullish on. But before that, let's actually bring up Nykaa's chart up for you just to see how that stock is doing. It's reported some numbers. I mean, clearly numbers out there haven't really, cut it well with the street. We're seeing some amount of losses coming in for Nykaa. 3.5% was gone just when at the opening of the trade. But Anand, I'm going to quickly ask you about the themes: real estate, telecom, and financials. These are the three themes that you're bullish on. For real estate and telecom, I was reading a note which suggested that there is earning potential, and there is, the valuations aren't that rich anymore. So based on that, what's your assessment, and why do you feel that the valuations have a further upside, or maybe, the earning growth has an upside? By view of that, we could be looking at higher valuation coming in therefore.
I think one of the bigger themes which we are sort of, experiencing, or for that matter is evolving, is also manufacturing. So you have to appreciate that manufacturing as a sector, and the allied industries to the manufacturing, be it financials, be it cap goods, be it utilities and logistics. These are the areas where, we had severe stress in last decade or decade and a half, given that China was exporting deflation. China had significant overcapacity on everything, and they had policies which encouraged exports growth. I think that's changing. It's changing for the last few years. Very clearly, we are seeing, opportunity for the manufacturing outside China, which has survived the last decade and a half, to actually come back, having survived that onslaught, can make decent profits, can look forward to growth, and can have superior return on equity. I think that's the overwhelming thing. One of the sectors outside this manufacturing and manufacturing allied we like It's also telecom. You touched upon that's also a sector which has undergone severe stress in last decade, almost since 2006, more than a decade now. That there was a serious price competition. We have seen the Indian ARPUs only going down, and the point that now at $2, we have practically unlimited voice and unlimited data. I think this is something which we believe has bottomed out. I don't think pricing can go down. On the contrary, we believe for businesses to reinvest for 5G, so the businesses to continue to reinvest to keep the quality of networks, they will need to make much more money. And to that extent, this ARPU has to go up. When I say ARPU, it is average revenue per user, which we pay every month to the telecom companies, have to go up slowly and steadily for them to continue to upkeep the telecom infrastructure and actually improve upon that. So these are some reasons where we believe the cycle has turned, the trend has changed. Almost a decade and a half of low ROE, low profitability, scenario which we have got used to is changing structurally towards higher profitability and hopefully a higher return on equity into the future.
Sure. Anand, staying on the cycle bit, you're also bullish on the financial sector overall. And we've seen PSU banks really doing well. In fact, let's just say that was the theme that played out last year. In this quarter also, it was no different. We saw PSU banks really doing well. Bank of Maharashtra was probably topping the list when it came to the profitability year-on-year growth picture. But what do you make out of it? Do you still think there is more steam to this rally, and between private banks and PSU banks, which is the one which looks attractive in terms of valuation and the earning growth?
I think the prospects are bright. As I spoke, that if our thesis of manufacturing doing well in this country, and if you were to believe that there is a private sector capex around the corner, that augurs well for the banks in general. One, in terms of credit growth rate, but more importantly, in terms of asset quality. We believe the higher profitability of generally India Inc. is a good news for banks. Banks are most leveraged to the economic recovery, to the health of the Indian corporate sector. And that's something which we believe is just begun. Indian corporate
Anand,
sector
just
have
to interrupt you out there, Anand, we aren't seeing really great set of macros, right? Just as yet, IIP numbers are still weak. We are seeing inflation still being at 3-month high. So overall, if I'm just looking at the last 2-3 month kind of picture, the macroeconomic setup or the macro setup is still not supporting the kind of fundamentals that these financials have been showing thus far. When do you see that changing?
Indeed. I think you're bang on. And when you're saying that, that's why I said the private sector capex is around the corner, because it's been around the corner for far too long. But I think government's persistence on doing a public sector capex, which at some point of time will will crowd in the private sector capex also. That's a belief. I think it's been far too long that we've been waiting for that. Make it India, Atmanirbhar, PLI, and more recently, the significant capex announced in the budget. As and when that gets implemented on ground, my take is we will have some crowding of the private sector capex also. So you're right. Yet we are not seeing, the economy in full steam, doing extremely well. Given what's happening in the rest of the world, you also have to appreciate. Last year was a year when China, a very large economy, was under lockdown. Europe, a large cluster, third largest cluster in terms of that, was under severe stress of high energy prices. And US, we have seen significant rate hikes leading to some sort of a slowdown in that economy as well. So I think as we move forward in 2023, the China opening up should help. The lower energy prices in Europe should at some point of time start help that economy also. So yes, the global backdrop should improve slowly, gradually, but more importantly, the Indian backdrop or the Indian economy should actually accelerate ahead of others. More importantly, as you rightly said, yet we don't have macro being so well, and despite of that, banks are declaring not only credit growth rate but superior recoveries from the NPAs, which we have seen in last
Sure.
even during the COVID times, we have seen
Sure, Anand,
consistent recoveries.
hold on to that thought, with that in mind, because of the NPA cycle and the recoveries that we've seen between the two, that is private sector banks and PSU banks, where we have seen the maximum amount of cleanup in the previous financial year, and of course taking in consideration this quarter. And with that in mind, where do you think we can further go on with this? Since the traction is already, we've seen significant amount of traction building in for PSU banks. You think private banks will kind of shine through more now?
I think it's not about public sector bank versus private sector bank. It is the banks which were exposed to corporate sector, the banks which were exposed to manufacturing, banks which were exposed to utilities, banks which were exposed to infrastructure, where we've seen the most pain in the last decade. And I think all the banks, both private sector and public sector banks, have seen decent recoveries, but my take is there's more to come. More importantly, I think the future credit growth rate is going to be that sector. And if the economy does well, if we have manufacturing taking off well, I think the credit performance of these corporate loans, which would give into the future, would also hold very well for next 2, 3, 4 years. So I think it's not so much about public sector banks versus private sector banks. The banks catering to the corporate sector has had a lot of tough times on the backdrop of whatever happened between 2016 and 2020, post the asset quality review, the AQR. I think the same banks would actually also overshoot on the other side in terms of return on equity, in terms of profitability for a while. Again, not structural, but cyclically we will see better profitability in the same banks, which also had a far lower profitability between 2016 and 2020.
All right, Anand, with that manufacturing theme in mind, right, and China now again recovering and starting up their whole economy, a lot of questions have been asked around metal sector, right? Because metal sector, we've seen not so great margins playing out in the previous year. In this year, do you think that is a sector which probably will see some revival? The hopes are, of course, large enough, high enough when we talk about China. Do you think this is the year where the margins will come back for metal companies?
So again, the basic tenet of metal industry is that it's always unpredictable. It will be always volatile. So nobody knew that they will deliver such as superb results in 2021 and 2022, and nobody predicted that they will have such a disaster in 2023. Having said that, I think China opening up is a very big element in the overall stability of metals industry. I think China is not only one of the largest producer of metals, but is also one of the largest consumer of metals. And to that extent, the entire commodity complex had a very tough time in 2020, almost last 6 to 8 months, when there was a significant lockdowns and lack of economic activity in China. I think from that perspective, what I hear from various market experts, what we hear from people in that industry, the only common thing we hear from even the global metal industry is that the worst is behind. We have seen a very, very difficult period where Europe destocking was significant while China was locked down. And even to some extent, there was a destocking in US also. As we go forward this year, while the demand might not be significantly higher, but the apparent demand because of the restocking cycle should be decent. And to that extent, what we can say is how much better things can get, but we believe the things will not get worse from where they are. Is a general expectation from the market.
Clearly no contra call coming on that one, but Anand, we'll leave it at that. Thank you so much for taking out the time and speaking to us.
My pleasure. Thank you very much for having me.
Well, with this, it's a wrap. Thank you so much for watching. Please post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For the rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.